Welcome, dear traders. You're watching a recap of the Asian session as the US is slowly but surely approaching the default deadline. Stock markets are sliding to multi-week and even multi-month lows. In the morning, Australian, New Zealand, and Chinese stock indexes retained a downward movement, and Japanese equities incurred less significant losses. Despite a decline in the Topix index, the Nikkei climbed markedly today. Demand for Japanese stocks among foreign investors has been rising for several weeks. It's quite predictable given mounting concerns about default in the United States, as the lawmakers are still unable to reach an agreement and the loan weekend is around the corner. Rating agencies are worried about the US credit rating. Yesterday, Moody's put the United States credit on a watch for a possible downgrade. Fitch put the country's AAA rating on a negative watch in a precursor to the possible default. The standoff in the negotiations on the debt ceiling persists as both parties are not willing to make concessions. Democrats, led by US President Joe Biden, want to raise taxes on the rich and increase budget spending. Republicans are strongly opposite to these plans. Nevertheless, many analysts believe that the parties will be able to strike a bipartisan deal before the deadline. Late on Wednesday, Kevin McCarthy stressed the need to avoid default. "We are not going to default," he said. However, so far there has been no progress. The default risk is still too high. It makes investors think about various scenarios. As a result, market uncertainty persists. Surprisingly, the US dollar managed to take advantage of default fears. It climbed as a safe haven asset, following a Fitch Ratings warning that the US could begin to miss payments on some of its obligations. The US dollar regained its upward movement amid such statements almost instantly and jumped to a new 7-week high of 104. In the Asian session, the greenback was trading in the bullish channel of 103.80 and 104.20. In addition, the Fed meeting minutes were released yesterday. They also helped the US dollar rise. The minutes revealed that Fed policymakers had completely different opinions on monetary policy. However, they were sure that there would be no rate cut in 2023. The central bank could take a pause and resume tightening at any time if necessary. Therefore, the US dollar index has been growing for the fourth consecutive session. It has been maintaining bullish momentum for the third week. After breakout above 105 points, the US dollar may rise to the resistance level of 105.70. Many indicators signal the upside potential of the US dollar, although it's somewhat limited. The yield of US government bonds with a various maturity climbed as well. At the same time, annual Treasury notes are only a few basis points away from the 23-year high. Usually, the growing yields of US government bonds are negative for the yen due to the rate gap between the Fed and the Bank of Japan. However, the yen remained unaffected by a rally in the bond market and advanced against the US dollar to 139.40. Apart from Japanese stocks, investors seem to be revising their portfolios in favor of the yen. It's more attractive as a safe haven asset amid the endless debates over the debt ceiling in the United States. In the Asian session, it maintained bullish momentum, moving in the price corridor of 138.80 and 139.70. However, despite this slight pullback, the dollar-yen pair was still rising. It advanced to an annual high of 139.70. The Australian dollar also fell because of a stronger US dollar. The Aussie and the Kiwi are rather sensitive to risk sentiment. As risk aversion persists, they have dropped to multi-month lows. Uncertainty over the debt ceiling deal and signs of an unstable economic recovery in China undermined the rise of the Aussie. At the same time, data on the labor market and manufacturing PMI index in Australia signal to the high likelihood of a pause and a tightening by the Reserve Bank of Australia next month. After the 3-day losing streak, the Aussie slipped to its 6-month low of a 0.6530 early Thursday. In the Asian session, the AUD-USD pair continued to decline in the range of a 0.6522 and 0.6549. The bearish outlook will remain in force for some time. The New Zealand dollar lacked the strong drivers as well. The pair slid into the range of a 0.6077 and 0.6116 due to strong bearish pressure. After the Reserve Bank of New Zealand hinted at a pause in the tightening cycle, the Kiwi dollar pair has been weakening for the third session in a row. It broke through a 2-month low of a 0.6094 and went even lower to 0.6086. The forecast for the pair remains bearish. And that's all for now. Please have your comments down below. Subscribe to our channel and stay up to date with the latest market news with us. And see you soon.